Melissa Alvarado, from Honduras. You are an Ironman. The first time I heard these words was September 2016. I love this sentence because it contains three of the words I often use to describe who I am. I am a Honduran, I am an Ironman, I am an Alvarado. When I was 6 years old, I got to experience for the very first time what it felt like to represent my country in an international swimming competition. I was the youngest Honduran in the competition. I was so proud and so nervous. And it was the very first opportunity I got to experience what it felt like to represent Honduras. Eventually, I moved from swimming and became a runner. I ran my first marathon when I was 29. And then I ran 10 marathons, one a year, until after my 10th, I no longer felt that same feeling of accomplishment after finishing a marathon. And then I saw my brother finish his first Ironman. After a 2.4-mile swim, a 112-mile bike ride, and a 26.2-mile run, I saw the video of his finish. He was looking so strong, and then the announcer said those words. Jose Alvarado, from Honduras, you are an Ironman. I felt chills, and I said, I want that. And now, a year later, I became an Ironman for the very first time. And finally, I am very proud and grateful to say that I am an Alvarado. Hello, everyone. I'm Melissa Alvarado, VP of Growth and Analytics at Chime, and it is a real honor to be here with you. My father, the head Alvarado, has been the biggest influence in my professional career. He started his career in the financial industry when he was 15. He was a janitor at a bank during the day, and at night went to school. He would show up for work very early every single day, make sure that he would finish with his janitorial responsibilities as soon as possible so that he could volunteer in other departments and learn. He eventually got promoted to a bank teller, then joined the accounting department and compliance, and then one day, Citibank told him, we want to hire you to overhaul the compliance department for Honduras. After he successfully did this, they asked him to do the same in Panama and Guatemala, and he accepted, saying, one day I will come back to Honduras, and I want to return as general manager of the bank. And so he did. 6 years later, he came back as general manager and president of Citi Honduras. He then took on a challenge to overhaul a bank that was in the brink of bankruptcy in Honduras. After he successfully turned that bank around, his patriotic duty called to him. My father believes in fairness, he believes in integrity, he believes in making an impact, and so that led him to become finance minister of Honduras. My father makes me so proud to be an Alvarado, and a lot of who I aspire to be as a professional and as a person stems from all the things that he taught me from a very young age. My career in finance started right after college. I joined Capital One as a business analyst in the Hispanic marketing. I was very excited about my first job, and I was very excited that I was getting the opportunity to work in Hispanic marketing here in the US. The experience at Capital One, even though I didn't know it at the time, was really going to help shape the rest of my professional career. I learned a couple of very important things at Capital One. First, I learned about the power of data. We had access to so much data from our customers. We knew when they paid their bills, we knew what stage in their professional lives they were, in their personal lives they were, based on their expenses. We knew if they liked burgers or tacos. Really, the possibilities of what we could learn about our customers were really endless, and the power of data was incredibly amazing. But I also learned that the business models in the banking industry were not very well aligned with customers' financial health. It turned out that Hispanics were less risky than their general market counterparts. That meant they paid on time, and they didn't exceed their credit limits. The problem is, when you pay on time and you don't exceed your credit limits, you don't pay fees. And when you don't pay fees, banks don't make money. So the Hispanic business, the Hispanic market was less profitable than the general market. This was a disheartening realization for me, and I vowed to never work in banking again. I wasn't sure what I wanted to do next, but I did know that I wanted to work towards the opportunity to make a bigger impact. And so I decided to get my business degree at Stanford. During those 2 years pursuing my MBA, I was lucky enough to meet a lot of people who were starting companies, a lot of entrepreneurs who were identifying problems in many different industries and deciding to disrupt them. I was lucky enough to go to school with classmates who disrupted industries such as healthcare and real estate, dating, and the finance industry. Had a couple opportunities to join, but I was still very skeptical about the finance industry, and so instead I decided to join a company called Adquisition. This is where I learned the ins and outs of online advertising. This was 2005, so there were no iPhones and Facebook didn't exist. Online advertising meant advertising on a desktop, and MSN and Yahoo and AOL and MySpace were our main publisher channels. Online advertising was a very different experience. First, learning was so much faster. At Capital One, our main channel was direct mail, so we would launch a test, we would wait for 3 weeks, and then we would start to get some read on response rates, and it would take much longer to learn about performance. At Adquisition, I was getting a daily report card, and so we could learn, we could iterate, and improve so much faster. Adquisition hired to improve and scale their online advertising efforts. And when I first looked at their ads, I thought, this is going to be easy. Their ads did not follow any of the best practices that I had been learning about during many years of education. It was very humbling when week after week my daily report card told me that all of my concepts were big losers. And so very quickly I had to unlearn everything that I had learned in school about marketing best practices and what would make a good ad, and lean into the data and test and iterate. And 5 years later, my idea of what best practices were in online advertising were very different than what I had ever learned in school. After that, I joined a company called Check.me. Check.me brought me back into the finance industry. It also was my first experience in mobile advertising. Check.me was an aggregator of people's financial accounts and their bills. And their goal was to let people know how much money they had and how much money they owed at any point in time so that people could make better decisions about their finances. I was in charge of revenue, and so we would cross-sell other financial products to our customers. I was once again reminded that the finance industry and the consumer's best interests are not always aligned. Turns out that the most profitable cross-sell usually is a credit card, even though opening another credit card is probably not in your consumer's best interest at heart. And so I questioned once again if I should stay in the finance industry or not. And then came Chime. I didn't know it at the time, but Chime really is a compilation of all the experiences I had had in my life up to this point. Chime was an idea at that point. It was an idea in the banking industry, and so I had a lot of doubts. And I remember walking over to meet Chris, the founder and CEO of Chime, and thinking, I will hear him out, but I vowed that I would never join the banking industry again. I don't think I want to do this again. He said two things that were very important for me. One, he said, I believe that people should have better options when it comes to banking. That was very interesting, but I had heard that before. Second, and more important for me, he said, I want to build a business that's not based on fees. And that made me believe. Because I believed that if we build a business that was not based on fees, that was not going to rely on people paying late, on not having enough money in their bank accounts, if we could build a better business model, then we were going to be forced to listen to our customers. We were going to be forced to innovate. And then that made me believe that we were about to make something big happen. And so in January 2014, I decided to join Chime. And 5 years later, Chime is the clear leader in the US challenger banking space. We have over 3 million FDIC-insured bank accounts. We are opening hundreds of thousands of bank accounts on a monthly basis, which is as much as any of the large banks here in the US. We just finished raising our Series D at an evaluation of $1.5 billion from some of the most prominent investors out there. So how did we do this? Well, we started with a mission. We said, we want to serve the 150 million people who are living paycheck to paycheck in the US, and we want to help them achieve financial peace of mind. And second, we said, we need to build that right business model. So Chime makes money off of interchange. That is our main revenue driver. And what that means is that when our customers decide to make a payment with Chime, the merchant has to pay Visa a fee for the right to use their network. And then Visa shares some of that revenue with us. Ultimately, that means that for us to have profitable customers, we need our customers to say, I want to make the majority of my purchases with Chime. And I want to do that for many years. So we have to listen to our customers. We have to make sure that they're happy. We need to understand their financial needs so that we can iterate on the product and build a product that's going to help them so that they continue to choose Chime for a long time. So over the last 5 years, we have been focused on 5 of the main pain points that we have heard from our customers. Number 1, 78% of the US population lives paycheck to paycheck. They're running low on payday. And so Chime gets their paycheck up to 2 days early. The average person in the US pays $350 a year in bank fees. We have no fees. About 60% of the US population has no emergency funds. So if they have an emergency, they have no money to deal with us. And so we have created a savings account that also has automated programs to make it easy for them to save and to start building those emergency funds. Fourth, people are anxious about their finances on a daily basis. And we have built a very easy-to-use mobile app. We send them notifications on a daily basis to make sure that they understand where they stand. And so every morning, we send a notification to our customers. We say, good morning, this is how much money you have in your bank account. After every purchase, we send them another notification, and we tell them, you just spent this amount at this merchant, here's how much money you have. Our customers have no surprises when it comes to their finances. And this gives them a sense of control and gives them a little bit of peace of mind. And then 50% of the US population is either credit invisible, meaning the credit bureaus don't know that they exist, or have low credit scores. And so now in 2019, we are launching a new type of product to make sure that we're helping them improve those credit scores and build their credit histories. Now, the result of that is that our customers love us. They tell us that they want us to get involved in other areas of their financial lives. They want us to lend to them. They want us to invest. 2 years ago, I thought we were crazy for thinking that we should lend to our customers. Lending is risky. Lending tends to be predatory. And I wasn't sure that we would be able to stick to our mission and lend profitably. But I have changed my mind, and there are really 3 key things that have made me change my mind. First and foremost, there's a real need. Our customers tell us that if they have a medical emergency or if their car breaks down, they have no one to go to get a loan. Second, they tell us that they want us to be the person to help them in those situations because they trust us. And third, we have a profitable business model already. We have been able to make the checking account very profitable. And so how we make decisions about what we build at Chime, we take into consideration, do our customers need this? And second, is this going to be something that is going to strengthen the relationship of the checking account, which is always going to be our main value driver? So if I launch a lending product and I break even on the lending product, as long as I have happier customers who are choosing to use the debit card more often and are staying around with Chime longer, and if they're inviting more of their friends to join Chime, I have built a profitable product because their relationship with my customers is much stronger. And so today, I not only believe that we can lend, I think that we have a responsibility to do so because no one else is going to approach this problem the way that we are, with a mission-driven approach to really help people lead healthier financial lives, with a customer base that is loyal and loves them, and third, with a business model that is already working. Chime is very uniquely positioned in this space. We have happy customers, we're helping them lead healthier financial lives, and we have a very healthy business. So how did we get this? How did we get here? First, we identified some real pain points, and we made it our mission to solve these pain points. We hire people that are passionate about this mission. Our number 1 value in the company is to be member-obsessed. Second, We found the right business model, the business model that is going to support our mission. Third, we obsessed over cost efficiencies. We have a very simple revenue model, but there are a lot of costs that are associated with running this business. You have acquisition costs, we have processing costs, you have call center costs, you have fraud costs. There's so many costs that are associated with this business, and we focused on building an infrastructure that was very efficient because that was key for us to be able to build a profitable business of an interchange revenue model. And last, we are data-driven. We use data to understand the health of the business, our customers' profitability, to understand if our customers are happy, to understand what their financial needs are. And then we set aggressive goals, we track our progress towards them, and we use data to understand whether we have achieved our goals. Not only, though, if we have achieved them, but to understand the why. Because data is not just about reporting, data is also about insights. And as a result, we are helping millions of customers in the US live healthier financial lives who are happy and engaged with our product. So how do you build a data-driven organization? First, it starts with identifying the right KPIs to run the business. But let's be clear about this. If you have more than 5 KPIs, that is way too many, and you do not know what KPIs you need to run the business. Once you've identified those key KPIs, you obsess over them, and you start at the top. If your CEO and your executive team, if they know and care about your KPIs, everyone in the company does. At Chime, we start every single week reviewing our KPIs and our progress towards them in our executive team meetings. We share those exact same KPIs with the rest of our employees in all of our all-hand meetings. And we share them with our board on a monthly basis as well. Second, you must trust the data and act on it. Now, for this to happen, you need to have reliable data. You need to make it easily accessible and visible to everyone. You need to have a common language. When you say, how many active customers do we have, everyone should understand exactly what the definition of an active customer is. And last, you need to make it part of your daily routine. My growth team and I, we receive an email every day at 6 in the morning that gives us a report of how we are tracking towards our monthly and quarterly goals. And it lets us know how did the previous day affect our progress towards them. So by 6 a.m., my direct reports and their direct reports all know exactly who and what needs to happen if we want to hit our goals. And the result of this has been that we have been able to build a best-in-class acquisition machine in this space. And at the end, what this means is that we have been able to support millions of people in their search towards financial peace of mind. Thank you.